Hi guys, Brian Asset Management here today, and I'm doing something a little bit different. I'm going through NVIDIA's Q4 financial results. I'll be using my 7 simple steps to evaluate the stock and see if it's improving. Quickly to look at the share price. As you can see, NVIDIA's had a good day today, up almost 2.5%, but after hours the stock is decreased. It's gone down 2.45%, so it seems shareholders have not enjoyed the earnings as of yet. NVIDIA's share price currently is $565 a share, so let's head on to my 7 simple steps. Just quickly looking at their earnings per share, they have beat their earnings per share every quarter, and this is no different as their estimate was 2.81 and their earnings per share was actually $3.10 a share. So good news on NVIDIA for beating their earnings per share. The first is the P ratio less than the market, and the market is currently 21 and NVIDIA's P ratio is 94, so that's a fail. Next is the P ratio less than the sector. The sector is technology and that is 41, so it is a fail again. So that's 2 fails to start, but let's head into their financial statements. So step 3 is the revenue increased, and as you can see in Q4, the 3 months ended on the 31st of January 2021, it is 5 billion, whereas in 2020 it was 3 billion. And if we look at the trailing 12 months, it was 16 billion against 11. I'd say there's a check mark there as the revenue is increasing. Next, we want to look at the net income. Q4 of 21 it was 1.4 billion, and in Q4 of 2020 it was 950 million, so that is a check mark. And also if you look at the trailing 12 months, 4.3 billion to 2.8 billion, so once again the net income has increased. My next step would be normally looking at the shares outstanding, but they haven't released these as part of this press release, so I'm just going to skip that. So now we want to see, are the current assets greater than the current liabilities? And as of Q4 the current assets are just over 16 billion, increased from the prior year, but they are greater than the current liabilities that are at 4 billion. So there's a check mark there. The current assets can pay off all the current liabilities. Now just comparing as well, the current assets versus the total liabilities, that is 16 billion to 12 billion. So there's a check mark there. Good news on NVIDIA being able to pay off all of their total liabilities with their current assets. But if we look at the prior year, you can see this was 5 billion, so their long-term debt has increased by quite an amount. Would be worth checking out why that has happened, but they can still pay off all of their debt. And finally is the free cash flow increasing. As you can see here, the free cash flow of Q4 was 1.7 billion and the year prior was 1.3 billion, so that's a check mark there. And if we look at the 12 months end, it is very close, but it's 4.6 billion to 4.3 billion, so their free cash flow has increased. So just looking at the free cash flow of the last 12 months, it has around 4.7 billion, and with a market cap of 360 billion, that gives you a free cash flow yield of 1.3%, which is quite low. I would like to see that a lot higher. Normally the sweet spot I'm looking at is anywhere between 3 to 5%, and anything more than that's great. So that would give me a free cash flow ratio of 75. Once again, I would say that is very, very high. Really, you're looking from anywhere between 20 to 40, so to have it at 76 is very high. Just to quickly compare it against its competitor AMD, they would have a free cash flow yield of around 0.75% and a free cash flow ratio of 133. So in terms of which of the companies is better value, I would say NVIDIA is better in value, but to compare it with something like Intel, that is a free cash flow yield of 8% and a ratio of 12. So if you believe that NVIDIA is going to keep on growing at its same rates, I would say they look like a better buy than AMD. But in terms of sort of straight value for money, I would say Intel is the better choice. But you've come here for NVIDIA, so I might just cut all that out. So to just quickly summarize the 7 steps, P ratio less than the market was a fail with 95 to 21. The P ratio was not less than the sector with 95 to 41, so that's 2 fails. Step 3 is the revenue increasing, and the revenue has increased from 3 billion to 5 billion and also increased from 11 billion to 17 billion, so that is a check mark there. Profit has increased from 950 million to almost 1.5 billion and has increased from 2.8 billion to 4.3, so that was another check mark. Current assets can pay off their current liabilities with 16 billion to 4 billion, and they can also pay off their total liabilities with 16 billion to 12, so another check mark. And I'm giving them an extra check mark for the total liabilities. And has the free cash flow increased? The answer is yes. It's gone from 1.3 billion to almost 1.8 billion, and from the last 12 months from 2020 it's gone from 4.3 billion to 4.7 billion. Right guys, I want to thank you for watching. Give a like and a comment if you've enjoyed this style of video, and if you want me to release more of this where I review the earnings as they come out. Also leave a comment on your thoughts on NVIDIA. Do you still think it's a buy with its earnings? Are you with the market on the slight sell, or are you against it and think this is a good opportunity to buy? And please consider subscribing if you enjoy investing and stock analysis videos, and I'll catch you guys next time.